All right, guys. How you guys doing? Welcome to this webinar, guys. How you guys doing? How many of you can hear me? All right, so if you can hear me, please kindly indicate. All right, I believe this webinar tonight will be live on YouTube. All right, so if you're on YouTube, please kindly follow us as we dive into this webinar tonight. All right, so just a few minutes as we get everything set up. All right, so everything is set up now. Okay, guys, so I'll be glad if you are following us on YouTube. I can kindly share this link to all your friends to come and join us. All right, so in tonight's meeting, we'll be talking about the Trendline. Okay, so we'll be talking about the Trendline in tonight's meeting. So let me share my screen. All right, so I believe you can see my screen. Okay, so we'll be talking about how to draw trend line like a pro in tonight's meeting, guys. All right, so if you have any question during the webinar, please kindly use the chat box. Then towards the end of the webinar, we'll be able to answer those questions for you guys. Okay, so that's how we're going to roll tonight. All right, so we'll be talking about how to draw trend line like a pro. All right, so trend is your friend if you identify it early, as we all know, right? So if you have been trading for a long time now, I believe you are familiar with the word trend. And what is just a trend? A trend is just when a market is trending in a certain direction, okay? And as market moves in that certain direction, it continues. So, and that is the time we make the biggest amount of money. So, and that's why it's very, very important for us to pay attention to market moving in a certain direction, because if you can catch that move, you'll be able to double your account easily. All right. Why you need to pay attention to trend. Now, market moves in wave, and this wave creates pattern, guys. Okay, so let me show you this. We all know that every market starts with an impulse, and this impulse, makes correction, goes up, impulse again, another correction, impulse, correction, impulse. So markets moves in, this is kind of a wave movement because they are not in a straight line. And this wave can be plotted in this kind of charts, whereby we have the price here, let's use P, and the time here, let's use T at time. All right, so as market is moving like this in a wave, then we can draw a line touching the base of kind of a support where the market reach before it bounces off the line. Okay, so that's why market moves in wave, and this wave creates trend. So these are our trend, and also in reverse is the case whereby the market will start reversing this way. Okay, the market can start reversing, and also this can create another trend. All right, so irrespective of what the market is doing, moving up or moving down, we use trend to identify when the market, where the market is going, and also the trend help us to see when is most probabilities setup that we can use to enter the market, because we are only looking for the highest probability setup, whereby the minimum, we have a higher probability win compared to loss. For instance, if the market is moving this way and some persons are entering at this point, what is your chance of making money than losing money? Find out that you have like 30% chance of winning to a 70% chance of losing. But what of in case market is moving this way and you entered here? All right, if you entered here, you have like 90% of winning to 10% of losing. You find out that this one has a very high probability than this. So using a trend will help you to identify that when the market gives you a high probability setup. All right. So now we need to know the type of trend. Don't worry, I will just need to establish this concept before we dive into the real market. So what are the type of trend? Now we have the uptrend, which is called the bull market. As I've explained before, the uptrend, which is the bull market, is very simple. When the market is what? Moving up. This is an uptrend, simple as it. All right, so this is an uptrend. This is the bull market. All right, so if you are drawing a trend line using a bull market, you draw it touching the base, touching the kind of the support. All right, this way. Don't worry, we're going to establish the rule of drawing trend. So this is how we draw trend line typically. But most times, all markets are not this as clear as this. You can see the market, there are steep, some are flat. All right, so that's why if you just watch a scenario whereby everything is just as perfect as this, what of whereby you have something that moves up like this, go up, come down like this, and goes up? How do you draw a trend like this? So that's why this webinar is very, very important, because it's going to help you to show you the best way on how to draw trend line. But irrespective whether the market is going this like this or like this, they are all what? Bull markets. Okay. All right. So that's just by the way. Then the second one is a downtrend. The downtrend is bear market, and we can see it to be this, where the market is coming down, and it's coming down. All right. And if you are drawing a trend in this scenario, you touch this peak, right, where the market makes like a lower high, and the market keep dropping lower lows. All right, so these are trend line. Then we also have the sideways move. A sideways move is very, very difficult. We call it a kind of a choppy market, where the market drops like this, it goes up like this. You don't know where exactly the market is going. You think it's coming down, it breaks up again, it does something like this. So in this scenario, you don't actually know what the market is doing. So this is kind of a sideways move. Okay, so the best thing to do in a sideways move, if you are a beginner, is for you to stay clear of the market. Just wait until the market gives you a certain direction by what you are going to learn tonight. Now, I've seen a lot of traders putting trends all over the charts. It's not about putting trend. That doesn't determine the direction of the market. We are only using trend for a particular thing to identify a particular setup in our own case scenario. All right. So, but irrespective whether you are putting trend anyhow, and the most important thing is that majority that are putting trend are putting it wrongly. They don't know exactly where to put the trend. They're just drawing all sort of things, because there are difference between trending and when the market is forming a pattern. Okay. Most times market forms a pattern, they are not trending. And if you cannot differentiate between the two, you might be getting the whole thing wrongly. All right, so that's just by the way. So now we are going to go to establish this fact, drawing the trend line. It is important to know the overall forecast of the market by drawing your trend line starting from a higher time frame. Now, this higher time frame, so a day trader, if you're a day trader, let's give this scenario now. If you're a day trader, these are day trader. Sorry about that. Let me find this. If you're a day trader and this is a swing trader, let's use these two cases as scenario. For a higher time frame as a day trader, you might consider it to be 4 hours. Okay. And for swing trader, you might be looking at what? Weekly charts. So if you are a day trader, during a time frame of 4 hours, now actually tell you where the market is heading for that day. And if you have gotten your trade line well mapped out on 4 hours as a day trader, you can now narrow it down to 1 hour to now see where exactly is happening. Then you can now take your trade at 15 minutes. This is an ideal time frame for what? A day trader. You first of all look at 4 hours. You look then confirm at 1 hour and also 15 minutes. Also, some persons might also look at 4 hours and immediately they jump to what? 15 minutes to take their trade. This is for day trader. But for a swing trader, they look at weekly, some even look at what? Monthly charts. Then they take confirmation on daily and their trade are taken on 4 hours. Okay? So you can see now when I say looking at drawing your trend line from a higher time frame, it boils down to the kind of trader you are. All right. So the kind of trader you are determines where you draw your trend line first. Okay. Because if a swing trader sends you a chart analysis, it might not make sense to a day trader, because if you take that into play, you lose a lot of money because you don't have the patience to wait for the market to mature or to play out. Okay. So ask yourself, what kind of trader am I? Then that will determine where you start to draw your trend line. All right. So now this is the most important thing, and I want you to start paying attention and taking a note from now. All right. A trend is set to occur when the market makes higher highs and lower lows. Okay. So now let's be more practical now. If we have something like this, are we trending? And you see some trader, they're drawing trend like this and they're drawing trend like this. Okay. And say, well, the market is going up, it's coming down. Now, if the market is in this form, we are just ranging or in sideways movement. We are not trending. So the rule number one for someone to tell you that we are trending said a trend is set to occur when the market is making what? Higher high and higher low. And this is where you see something like this in the market. For the first time, at least that market is said to what? Trending. So you are now permitted what? To connect this dot, this line, and this is your trend. So if you are showing me a trend and that determines your what? Your other things you'll be looking at for. If your trend is like this on this time frame and you are waiting for a confirmation before taking this trend, then you are correct. But if you are drawing something like this on this market, then this is not trending. You are actually waiting for a breakout of this pattern, which can be broken lower or higher. All right, depends on what the market has done before now. All right, so that is why it's important for you to know that a market is said to be trending when it's making what? A higher high and a higher low. So we consider this and we consider this. And once this market breaks this point here, this market is said to be what? Trending. The reverse is the case. Market can also trend like this. Okay, so this market is trending, provided that this second line has actually what? Breaking this first one. So the market is what? Trending downwards. All right, so this is the first rule that we need to take note of. We are going to go to the live market, but before we start going to the live market, let's note this rule. All right, let's note this rule. Now, the second rule that we need to identify in the market is in a market where you have more than two impulses going in the same direction, you are going to use the last two impulses. All right, the last two, because look at what I've drawn here. Most markets don't look this way. Most markets don't look as simple as this thing I've drawn like this. You can see some markets that have done this kind of move. So obviously, you know that this is what? A trend. But sometimes most of this low will not be touching this base. So how do you now put that into equation? So the rule say that you use the last two. You use the last two, meaning you connect this last two only. And what it means that anytime the market is breaking this two line, these last two impulses, it means two things. Either the market is reversing totally or it's giving us a bigger correction for a bigger move. Okay, so you use the last two impulses for your trend. This is the last two impulse. You use this last two for our trend, and it means that anytime this trend is broken here, we are considering all these things to be broken. Either the market is giving us bigger correction for a bigger move, or the market is reversing totally from here. All right, so that's what the second rule states, because most times markets can give us something like this, give us something like this, give us, I found out that you cannot connect this one to this. Now let's go to the live market so we can see what actually is happening there. Let's go to the live market. Okay, so we can see what we can take from here. All right, so this is a gold chart. This gold chart. All right, so if you take a look of this chart now, looking at based on these two rules we have established, what can you see? Is this market uptrend or downtrend? I believe by now you should know that this market is what? Uptrend. This market is uptrend. Is trending up, all right? Because one thing is obvious now that this market is what? Going up. This is up. It makes an impulse. It goes up. It makes an impulse. It goes up. So how do you put a trend this kind of move? How do you put a trend? Now, if you decide to put a trend here, you can see here, we put this trend. Now, does this touch this? You might be considering, oh, this thing doesn't make sense. But look at what the second rule said. Now, for the first time, for this trend to be valid, you can see this market has actually what? Broken this. So it meets our first condition. So putting a trend here is correct. But now, we are not just drawing a trend line for drawing sake. We are drawing a trend line so that we can use it to make better decisions, and that decision will result in making money from the market. Okay, we're not just trying to prove we can draw. No, we are actually here so that we can make money. And the second rule say that when you have more than two impulses going in the same direction, we use the last two. What is the last two in this scenario? Now, the last two in this scenario is this. Guys. This is the last two in this scenario. We have this move, it corrects here, and we have this move. This is the last two impulse in this scenario. So this is the last two we can use. Okay, let me actually use the main trend so we can have it established here. Let me use the main trend so that we have it permanently on this chart, because we're going to use this to analyze downwards to maybe to a day trader what actually he will be looking out for on this gold trade. All right, so these are our last two impulses, guys. Permit me to put it this way, because why am I putting it here? Remember, this is a monthly chart on gold charts. This is monthly charts. Okay, so we have put the last two. So that is what we are required to do to draw using the higher time frame. All right, so let's establish the next rule. As we're establishing the rule, we are working on this chart. Finally, you can see what we can take, as in the trade we can take using just trend line analysis. All right, so now let's take a look on the third rule. For sideways move to be in the same trend, they must have similar or equal looks. Let me repeat. For sideways move to be in the same trend, they must have equal or similar look. What do I mean? Now, remember that market moves in price, and that price is measured in time. Now, what do I mean? That, we have the market making this move, impulse, and it gives us this correction, and it goes this impulse, and it gives us this correction, and it goes this impulse. Now, if this correction and this correction, which we call the sideways move, are not of the same time, okay, or they are not equal or similar, these two are not in the same trend. A typical example is what we can see clearly here now. Let's take a look what we can see here now. You can see that the market, this first move, Can you equate this? Can you tell us if this and this have the same look? The answer is no, they don't have the same look. Okay, because you can see this is stretched, why this is not. All right, so it will be madness to trying to draw a trend that connect this, which is not possible. So this market, this trend, this consolidation, this sideways move, and this one cannot be in the same trend, guys. They cannot be in the same trend. All right, so they cannot be in the same trend. So that's what the third rule said. All right, that's what the third rule said. All right, so now having established this, let's go down to lower time frame. Let's go to the weekly chart and see what the market is doing. Now remember, the first line we've drawn here is on what? On the monthly chart. But now when we now come down to weekly charts, we'll begin to see other things, other move of the market. And you can see further that this market did not break here. Let me confirm it. You can see this is gold chart. This one did not actually break here. So this is the top of the market for what you can see here now. And now from this move, let me ask you guys, from this second move, where are we going to put our trend from this second move? From this second wave, because we are considering this move now. The only trend we have here now is, for now, on this weekly chart, is we're having this trend that we need to analyze. So we have this impulse, correction, impulse, correction, impulse. Okay, so now you can comfortably put your trend at this point. Let me use this permanent. This is our trend, guys. This should be our trend. There should be a trend here. This is a trend because we have this move, we correct here, and we have this move. We are considering this to be a correction. We are considering this to be a correction, which it is, but that's not what we're talking about now. We're only talking about the support where the market drop, because you know how to put your trend line, that you use the lower lows to put a trend. And this is the lower low. Is market started here, it goes up, it comes down, it goes up. So we're using this point to connect this trend. And you can see this trend is broken. But for us to see this trend clearly, I think we need to go down to daily charts for us to see this trend clearly. Remember, we just drawn these two lines and we are heading down to daily charts. Now, on the daily charts now, we can also see this market. Can also see this market to be trending. So we can draw our line from here to here. We can draw this trend. Why are we drawing this trend, guys? Because it meets our condition. What's our condition? We have broken this top. This market has actually broken this top here. You know, I believe you can see what I'm doing. Let me expand it. This market has broken this top. So we have this move here. We have this move. We have this correction. We have this move. We have this correction. We have this move. Okay. So we are using these two we are using it to draw this trend. Okay. We are using it to draw this trend. So that's why we are drawing this trend at this point. So this is our trend. And what happened to this trend, guys? This trend is broken. Remember, we are only on the daily chart, and you can see also that the trend is broken. Now, let's take a look on the next rule. Now, what to do when there is a trend break? What to do when there is a trend break? There are a lot of traders that are trading trend break. We don't trade trend break, okay? That a trend has been broken, just like here. Imagine you are trading a trend break, and for instance, it breaks at this point, and you just jump into the market, just like here. You just jump into the market where you make small money, but the market comes back again. But there are places whereby if a trend breaks, we can take the trade because we have understood what is going to happen, because we have forecasted the market before then. So, but what do you do when a trend breaks? Now, there are three things you need to have in mind. The first, a trend break can mean three things. The first one, total reversal. Okay, total reversal. And because you've seen a total reversal in a particular trade doesn't mean it's the same in all. Okay, then the second one is slight pullback. We can all see that in this chart. And the fake out and continuation is the next one, which no trader wants this fake out and continuation. So you just break a trend and continue moving up. And if you have been waiting for to take a reversal at that point, you lose instantly. Okay, so having established this thing, take a look on it now. If you take a look on this gold here, you will see that a lot of this thing can be seen. For instance, a trend was broken here, it pulled back, and it goes up again. Another one was broken here. This is another trend. Sorry, this is a trend here. A trend was broken here, it pulled back, and it goes up again. Okay, well, look at this one. Can you call this? You see, this was a trend and it drops immediately and comes back. If you're not very careful, you just lose money here. You've lost money, exactly, because but this is daily to give you a lot of room to make that change in decision. But most guys will not think that fast, okay, because they're just trading a trend break, okay, and it continues. So what do you do? Now, it depends on the kind of person you are. We are coming to the exact thing to do when a trend breaks, but we are telling you the 3 possibilities that you need to be watching out for when a trend break. Okay? All right, so let's write on. Trading trend lines. Okay, trading trend lines. How to trade trend lines. Now, to us, trend line is a tool to our strategy, not the actual strategy. All right, just like a carpenter uses hammer, all right, and all sort of measuring tools, tape, and stuff like that. These are tools to his craft, all right. So we are using trend line as a tool to our strategy, just like other tool we use. We are using momentum measurement, like MACD, and also using Fibonacci to measure some certain levels. Okay, so these are tools to us. Now, I don't know where your background in trading. Some use trend line as a trend breaker, but the risk there is that if you don't know what the market is doing, using trend as a trend break as a strategy, most times you'll be trapped in that market. You'll be trapped. Okay, so let's go down to 4 hours. Let's go down to 4 hours, guys. So this is 4 hours on the. If you come to 4 hours now on the gold, you can see clearly that we are no longer. We are now on another trend. Let me prove it to you. The market is already making a different trend entirely. So how do we note that? Let me show you. This is 4 hours now. Remember, we are analyzing this thing together, and you can see this one is on daily. On these 4 hours, where do we put our trend? On the uptrend or downtrend? We can see clearly we are having a downtrend on the 4 hours, which is clear. This is a downtrend on the 4 hours. Okay, and inside this downtrend, we also have this smaller trade, but we don't consider this move on the 4 hours because 1 hour will take care of this. So on the 4 hours, we're having this. So, but it's always important for us to have this in back of our mind that within this trend, there's another internal trend here, which is very, very important. There's another internal trend here on the 4 hours, which is very, very important because the way we trade is simple. If this trend is broken, we expect the market to reverse to the next trend. All right, so this is what we have on the 4 hours, and that's what the market can tell us. So assuming you're a day trader, this is what you need to draw. After drawing this on the 4 hours, then let's move down to 1 hour. How to trade a trend line. Now, you can only take a decision when you are on the time frame you want to take a trade. Okay, assuming I'm taking a trade on daily, I don't need to go down this far. You just tick on that daily, and if it makes sense to you based on your strategy, you take that trade. All right, so we are now on the what? 1 hour. So what can we see on the 1 hour? Remember, we are seeing downtrend on the 4 hours, but on the 1 hour, I'm seeing uptrend. Okay, I'm seeing what? Uptrend. So this is what I'm seeing on uptrend. Now, remember that higher time frame have influence over short time frame, but most times the lower time frame will move before the higher time frame. But knowing that we have had this an impulse, a correction, and an impulse, so that gives me this confidence to draw this trend on the 1 hour. So, and I know that on the 4 hours the market is down, is having a downtrend. So I will have it in the back of my mind that if Kia is not taking, this market can reverse at this point. Okay, that is good. It can reverse at this point. All right. So that is one thing that is possible. All right. So now this trend line becomes valid. What you need to do is, if you understand structure, then you need to start looking into these points. Okay. So as a trend breaker, a trend, if you are a trend follower, if you are following trend, this is the time it becomes very, very important for you to take a trade when a trend has been broken. Why? Because predominantly you see that on the 4 hours, the market is trending downwards. Now, and the market has given you an uptrend on the 1 hour. You can see. So we call this uptrend on the 1 hour a slight pullback. Okay? Because you know that the market is downwards on the 4 hours. So if you're not having it in the back of your mind that if this market should break at this point here, obviously it's going to break this low. Okay, have you seen the idea now? Right, because we've merged what we've learned in 4 hours daily. You're not bringing it down to 1 hour. So we can also go below this for those day traders to 30 minutes. Let's stick to 30 minutes so we can see exactly what the market is doing here. And I can tell you guys that this market can decide to either two things that is possible here. The market can decide to pull back at this point, push up and drop. Okay, this is what might happen, or the market can easily decide to drop. Okay, so it becomes important for us to wait for this setup to complete, because this setup for me now is not complete yet. Okay, so as this trend is very, very, very important in gold setup now. This trend on the 1 hour is very, very, very important, because if this trend breaks, if I go to 4 hours, what we'll be expecting is a continuation downwards. If this trend breaks, we have this before we have this. Okay, that's why this trend is very, very important. So as a trend, if you want to trade trend break, this is where it becomes easy, because you are expecting from a higher time frame market to continue downwards. Okay, so you're expecting for the market to continue downwards, and that's why it's important for you to take this trade if it breaks this trend. So that is only time that taking a trend break is important. Apart from that, if the higher time frame is uptrend and the other time frame is uptrend, and you don't have any business taking a short position on 1 hour break, because you're going to be trapped in that market. Do you guys understand? Please, if you have any question, feel free to ask your question, and we'll be glad to answer this question, because I think this is very, very, very important, and this is where exactly most traders are missing it. They're just drawing trade randomly and taking trade that way. No, you don't do that. Okay, we don't do that. We only trade whereby it's syncing with what the higher time frames are saying. So once that happens, then we're able to take trade on the lower at the trend break in the lower time frame. All right. So do you guys have questions to this? All right. So if you have any question, please kindly let us know if you have questions so we can address it immediately. All right. So let me repeat this, because it's very, very important. If there's something that you guys should grab tonight, and that's one thing that is very, very, very important in your trading career. When you have, let me Show that here again. Okay, for instance, look at what happened here. If I should go down to before this, let me scroll up. This is 4 hours. Go to 4 hours on the gold chart. 4 hours on the gold, guys. You can see here. Now, you see what happened? Now, if I zoom out this, you can see clearly that there is a trend. There is a trend here. Okay, if you go to one daily, let's start on daily. Okay, let's start on daily so you can see it clearly. If you have been trading on this, let's focus on this. You are trading on this and you draw your trend like this, connecting this to this, and this market has been broken. What does that tell you? That possibility, or either the market is going to give you a pullback or a continuation downward. Now remember, this one daily has been broken. You are aware that daily market has been broken, the trend has been broken downwards on the daily chart. Then you now come to 4 hours, guys. You come to 4 hours, having that in mind, and you will be able to see this 1, 2, 3. Then, as you are drawing this trend, once this market is broken again on the lower time frame, you don't need any prophet to tell you to take this trade outright. Just take it, because you, first of all, there is a scene that happened on the daily which only you have identified, and you've seen the same thing sinking again on the lower time frame. So this is time. This is the only time a trend break trade is possible and will give you a very good trade, because you can see immediately this one broke at this point, the market start reversing clearly. Okay, so that is it. Why I'm repeating this, because it's very, very, very important. That is the only time taking trade when a trend breaks is important. That's the only time it's important. Aside this, if you are taking trade because a trend break, you are just gambling, because you will lose more than you win. But this is the only time that taking trade when a trend breaks is important, guys. Okay, so if you have any question, guys, feel free to let me know. Elisha said, thank you for this eye opener. I appreciate you guys. I appreciate you. I appreciate you guys. All right. So absence of that, this is where we'll be drawing this curtain for tonight. Now, I have this thing in mind that we'll be doing this kind of updates for you guys every week, guys. Every week we'll be doing a video like this, a webinar like this, where we pick out something that most traders are struggling with. We analyze it together, and we see the best way we can help ourselves. Okay, if everybody is learning, even me, I'm still learning. Okay, so I believe in a community trade. As we trade together, we make more money. But if you are interested in doing a full top-down analysis, I use wave principle. If you are interested in learning how to do this for a living, okay, when you want to live off your trading profits, you want to be a master of the market, okay, you want to trade market with confidence. I'm running a mentorship section, all right, and this mentorship is a life mentorship. Okay, you're not going to graduate for life. What I mean is that after we've finished the basic class, we are trading together. Any trade I'm taking, I'm sharing with you guys every day. Even you'll be analyzing and we're sharing with us. Okay, even if you don't have money, we'll provide access form to you. You can trade along. Okay, so this is a skill that we are happy building a community of potential trader, guys. And if you are willing and if you want to take this to the next level, you can see contact me using any of my handles, Instagram and Sam Nebo, or WhatsApp. The link should be below this video. And absent of any other question, I wish you guys the best. Thank you so much for coming. Please, if you're on YouTube and you're watching this live, because it's live on YouTube, don't forget to like this video. Don't forget to subscribe and follow us on Instagram. Thank you so much, and I appreciate you.